Hey there, YouTube. We're going to get into market review here for the last week that we just finished up, so ending on May 11th. So looking into the market here, we're seeing SPY is cresting right over the value area for the year. So this plot over here is showing where the majority of the volume has traded since back in February. We had this down move off of Trump's tariff proclamations and been underneath this trend for quite some time. And we finally crossed over that here on May 1st, and we've been kind of range bound for the last week here. But a couple of things I want to point out is while we've had declining volume, we have seen more of the sectors starting to light up green. We're also seeing the S&P market breadth starting to flip for the long-term trend above the pivot point here up to the bullish side, and we had a pullback here on the short-term trends for the S&P 100 holdings, and we're able to hold the pivot here. So given that futures markets kind of gapping up tonight over the China and US trading news, it seems like perhaps we're going to start accepting this value up here, building more of a volume support, and perhaps breaking a trend a little bit higher. So switching the breadth moving average down here over to 50 SMA, seeing a lot more of the sectors holding above their 50 SMA. We're going to zoom into the 20 SMA, and you can see right around late April, we really started to push into an uptrend across all the various sectors, and averaging 74% now of the holdings across all of the sectors are above their 20 SMA. With a 5 SMA, we're looking at 62% with a little bit of a pullback here in consumer staples, healthcare, and real estate. So really good look here. Of course, the 200 is still kind of at large, and we're going to need to see a lot more work there before I'm really believing that we're not going to have some kind of a pullback at some point. So we had lots of advancement here within the SPY. That's great, but we need to build more volume. We need to build more support in this area here between 555 and 545, I'll call it, is just still kind of a concern. We did filled this gap down here. We left one down here after this strong advancement. So that's got me just kind of not necessarily believing this for the long term, that we're not going to eventually have some kind of a pullback down into this area before we make it even higher. So when that happens is really anybody's guess. Obviously, with all the headline risk, anything can happen at any point. So I'll be managing my risk accordingly. The other thing I want to point out here is past the bottom call from April 8th and some of these other days prior to that, we had a substantially increased volume. And since this advancement up here, we've really not been seeing the same kind of volume action. Like even on this dip here, we had pretty decent volume. Here on the down move from the tariffs announcements, we started to see some volume, but you notice it's really brightening up here, meaning that we're making very small volume deposits as price rises. So anytime I see price rising and I see volume on the decline, I take that as a sign of kind of a weak buy, and eventually somebody within the market is going to be taking profits. And again, I would be expecting us to see a retracement back into this range before we head any higher. Heading over to weekly volume profiles for the two major indexes that I like to watch, the ES and the NASDAQ. Of course, at the time of this recording, the market has already opened on Sunday tonight, and we have quite a substantial gap. It's, I don't know, about 1% or so, maybe 1.5% kind of gap up here. So decent move, not earth-shattering, and I think that's just because nothing has actually been announced for the details of the trade agreement in Geneva between China and US. So I would definitely say be incredibly cautious coming into the market this week on Monday. If you're somebody that trades the regular trading hours, certainly, be willing to risk less in order to account for headline risk, or wait for something to manifest on Monday. I believe Trump's administration will be announcing additional things, but at any point, China could be making retaliatory statements or anything really of the like. So just have low trust, I would say, for anything in the market. But looking at the volume here for last week, The one thing that stands out to me is that our value area is near the low end, and we mostly have kind of a B distribution here. We have a weak value here, and of course, where we kind of finished this profile up here is also kind of a somewhat decent block. It's obviously not as large as this area, but I would expect, of course, before this gap up, I was kind of expecting this area to be potentially resistance, and you kind of see that here, some profit taking perhaps, and some short selling, and we drove down very aggressively on this day, straight back down into some of the pre-market range from Asia and Europe early morning sessions. Coming into this with this gap up, this is not nearly as high of a value area as this. If the value area, 70% of the volume of the profile, would have been built up here and we had this gap, I would say that I would expect this to support. But given that it is much lower than these areas here, I'm kind of expecting some exploration within this gap before it's all said and done. Looking at the daily profiles, seeing somewhat of consolidation. We have some value areas at the lows of their days, and then the next day makes a lower value area. Then we have 2 days of value area basically being in the same spot. And then, of course, a strong move overnight and then back down. So the market, I think overall, this is a clear indication that the market doesn't really understand exactly where to go, where the value should be. And that's just a side effect, I believe, of the trade agreement looming. Also, we had FOMC and there was a lot of stagnation, and with volatility on the decline so far, we're not seeing as aggressive of a movement intraday as we've grown accustomed earlier in April and in February and some other months. So looking at NASDAQ, almost exactly the same story here on the weekly profile. Most of the value, 70% of that, is towards the low end. You could argue that it's somewhat in the middle, but notice this area up here is not so contrasted from the rest of it like it is on ES. We clearly have just kind of a quick rise in price, big volume print right around here, and then falling back down. On ES, we did have similar price action, but much more volume was printed here, but still only about 50% of this value area here. So a little bit more muddy, could be fuzzy if we do come down and look at this area again. Looking at the daily profiles, somewhat same as the ES. However, we did really make an aggressive move up and print a nice value area up here and consolidated at the lower end of that on Friday before obviously this gap up. So this looks a little bit more bullish to me. We just kind of had a retest probably from a grander, maybe the monthly profile. And when we come back up through here and print this one's pretty bullish. So this one here is just kind of a retest of that area before we finally apparently come higher here on the new week that started here on futures. Going into the week itself, looking at the internals directly with Top Lick was kind of interesting. So we opened up Monday, kind of had this gap down scenario, and we're slowly easing our way up into prior TWAP value area. And notice how confused New York market looks from MIT standpoint. If you've not watched any of my old videos, this is showing you the advancement decline breadth for price, and this one down here, same thing, but for volume. And the trends are just back and forth chop the entire day. Tick is all over the place here. Notice Top Lick, mostly chop kind of range, but definitely on the bearish side. And that pretty much sustained through most of the week. It was either very weak movement or definitely more on the bearish side. Looking at Tuesday, kind of the same thing. Lots of chop in the advancement, both for price and volume. Top Lick decidedly bearish and just trying to hang towards the low of range. So we had a nice strong rejection here right off of the TWAP range. It was pretty cool. Looking at Wednesday, the day of FOMC, mostly no strong price reactions. And I think that's just indicative of the fact that Jerome Powell and his crew basically said everything is as it should be, and they're not going to make any rate cuts. And more than likely, they're probably just waiting for some kind of trade deal or improvement between China and the US. And notice this day had a little bit of bullishness from Top Lick, but nothing with any kind of sustain. I did call this out on X on this day. We happened to touch both sides of the prior TWAP range on the third deviation, so that was very cool to see that. Otherwise, very difficult to trade this. And then Thursday, nice gap up, and of course, we sustained some highs. Friday was a very difficult day if you're looking for any kind of directional scalps. So we consolidated most of the day. Again, I think really just waiting for any kind of trade improvement from from the two big guys in the room, U.S. and China. Heading into kind of maybe a little bit of a new segment I want to try out is somewhat kind of just some trade ideas or just my thoughts on a couple names. So one name I find to be potentially at a great moment of opportunity here is Amazon. Everybody knows Amazon. Looking at the daily chart, weekly and monthly, I've got my eyes on them mainly from the standpoint of if there's a trade improvement between the US and China, I'm going to expect this name to finally start to bring itself back up kind of alongside the rest of some of the names that we've been observing in the indexes. I think it's kind of overall lagging still. I mean, sure, from April 8th, let's see, we've had about a 14% increase. So I guess that's somewhat in line, but I'm still really expecting this name to come back to life more so than what it has done so far. So we had a 32% decline, and if you go look at SPY and Qs, they're closer to the high, the all-time high, than the bottom, and that's just not the case with Amazon here. So once a very strong name, just not seeing that. But through our volume regime filter, through Trade Seekers tools that we have here, we're starting to see a long flip for the yearly outlook, so that's pretty good. And then on the weekly, we're not seeing that yet, but they don't have to align on the month. We never dipped into a short bias, so that's pretty good. And then I'm also still seeing some bigger volume spikes for them. So even early May, the first week of May, we had a pretty good volume spike here, right off their earnings, of course. And so now I think it's probably a decent opportunity to look at perhaps like a broken wing butterfly, and I would target something around looking at a tent for a broken wing butterfly. Put my tent somewhere down here. My loss would start to be built around that side, and then my minimum credit receive would cover basically anything up to infinity. If that's something that you're interested in, Amazon is one of the names I'm personally looking at. You'll have to do your own due diligence. Looking at, I think it was Apple. So Apple is another name that has been struggling and is kind of on my radar. There's a little bit of, I'm not necessarily real big on these, but there's a little bit of a trend line here. And the thing about Apple is they've really been struggling with the tariffs, going back and forth between all of Trump's comments. Are we fighting with China on trades or not? They've been flying iPhones in on planes, trying to kind of get around, circumnavigate some of the tariff issues, working with India. Of course, I've heard that they're doing pretty decent numbers with India now, but still, if a positive trade sentiment is finally going to hit the market this week, I would expect Apple to see some kind of positive increase off of that. Again, kind of like Amazon, they are looking at a 31% overall decline from this recent high during Trump's coming into the presidential seat here, and then from the low to where they're at right now, you could see, yes, they've had a 17% increase, but they're still much further away from all-time high than they are from the low. So they are lagging the indexes by a decent amount, I would say. And looking at this, I would say that obviously this low could be somewhat of an area for a stop loss, but that's quite low. It's quite a far ways away. So what I would target with a broken wing butterfly is I would look kind of around this area here as somewhat of a tent, and then look at giving myself credit for the ceiling to be anywhere above here. And so I kind of like this 194, 195 price area, and then anything below here, we start discovering any price in some of these massive candles that we had. I'm not really interested anymore in holding, and I would expect at that point the entire market itself would start to make new lows. So that's another idea I have. Nvidia is another name that's been obviously beaten down by all of the trade agreements, and interestingly, at least with this particular name, where we are seeing a decline in volume, so I would wait for a little bit of a pullback. But from our volume regime filter VRF, we're looking at a long bias across all the major time frames that I like to use. And so again, this would be another one where perhaps if we could see a little bit of a decline back in this area, like around 112, 110, then I would look for another broken wing butterfly somewhere around here, or maybe even see, depending on the kind of price movement and available premium on the chain, looking for something like this where the 10th is down here, and obviously your credit would be anything up above this line here and beyond. Stop losses or your max risk would start to build out below here. And again, similar sentiments to Amazon and Apple, where if they really start to come into these big candles and really break down in here, I would expect the whole market itself to have adjusted to a bearish sentiment and maybe start making new lows. The one thing about Nvidia is they do have earnings upcoming, and so you would want to make this potentially a quick trade. And for that, it is the last stock on the list here I'm giving tonight, because it's probably not as great of an opportunity as Amazon and Apple, all things considered. I think that about wraps up everything that I'm going to cover today. I hope you found this helpful, and feel free to comment. We've got about 65 members in the Discord now. Had lots of great conversation. We're doing a lot of idea sharing. We've got some trade models that I've put videos out for, and just a lot more interesting things coming, and would love to have you. So if you follow me on X, go find the community launch link, and from there you can get a Discord link. And encourage anybody that just even likes to trade, feel free to jump in and say hi, and who knows what'll come of it. So for everybody that does watch, that has already joined, greatly appreciate it. And I guess as always, thanks for watching and happy trading.